Assalamualaikum warahmatullahi wabarakatuh. Today we would like to present about introduction of capital market in Malaysia. So first of all, before we start, I would like to introduce myself. My name is Muhammad Shafiq bin Saidul Muhammad, metric number 19BB05011. I will present this topic with my friends Muhammad Iqbal bin Rosli, Muhammad Syahiran bin Mansur, and Rafidah Alia. So first of all, we will go through the introduction of this topic. So, the effective mobilization of financial resources is a critical prerequisite for economic growth, and an efficient and competitive capital market is an important precondition for the mobilization of financial resources. Financial resources can be tapped from domestic as well as international sources. Emerging markets in Asia have been attracting foreign capital flows for quite some time. The growth and development of capital markets in emerging countries, therefore, have been proceeding to a large extent under the influence of foreign capital flows. At the same time, national authorities in emerging markets have made efforts to strengthen and develop their indigenous capital markets. The Asian financial crisis was a major setback for these efforts. However, Malaysia's capital market is more highly developed than any other emerging markets, but it has much to do to develop to the next phase. Growth, structural change, and the pressure of competition have made it imperative to further accelerate the development of the capital market. The implementation of the government's capital market master plan covering the period 2000. So, the first section deals with the links between economic growth, development, and structural change in the capital market. This is followed by a description of the institutional regime for the capital market, including the modernization of exchanges, regulation, and intermediation services. A separate section takes up the international dimensions of the capital market. A financial section looks into the future changes to the capital market as the capital market master plan is implemented.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fidala binti Muhammad Jafaruddin and my metric number is 19BB05004. Today I will to present to you guys about the economic growth and development in the capital market. I will to present the financing past economic growth, which is with the table funds raised in Malaysia's capital market. The World Bank classified Malaysia, which had a per capita capital income RM 13,361 in 2000 as a middle income country. Malaysia's economy has a more than satisfactory growth record, growing at 6.7% per annum from 1971 until 1990 and at 7% per annum from 1991 to 2000. The economy contracted by 7.4% in 1998 following the financial crisis, but it commenced recovery in 1999. And in 2000 with 6.5%. The current global economic slowdown has adversely affected the economy, with marginal growth of 0.4% recorded in 2001 and growth of 3.5% anticipated for 2002. Okay, next, capital development. Capital market refers to the market for medium to long-term financial assets, and the purpose of the capital market encompasses corporate stock, public and private debt securities with maturity exceeding 1 year, and shares with no fixed maturity period which are traded in the stock market, the government bond market, and the market for private debt securities. The variety of capital market products and services as well as fundraising capacity expanded significantly, particularly during in the 1990. Up to the late 1980, the government funding needs dominated fundraising in the capital market. The other services and products that support this market also expanded, including activities of investment management funds, stock brokerage, and advisory services. For various Islamic products and services have been developed and promoted since the first Islamic bank, which is Bank Islam, was established in 1983. Okay, next, capital market development and future capital requirements. The banks played a major role in mobilizing financial resources for Malaysia, but the financial system must diversify to avoid overburdening the banking system as the economy grows and change structure. While the banking system will continue to be an important part of Malaysia's financial system, the insurance industry and other specialized institutions and the capital market must play a more prominent role. Next, the capital market must expand its financing capacity in order for Malaysia to meet its development goals. Furthermore, resources mobilization will be more efficient if markets are more competitive.
My name is Muhammad Iqbal Berosli and my metric number is 19BB05008, and I will present about international dimension of the capital market, which is the capital flows and the foreign investment. As outlined in the previous section, the capital market changed and developed significantly during the 1990s and rapidly assumed a more prominent place in Malaysia's financial sector. The gradual internationalization of the capital market has played an important role in this development, as well as raising new issues concomitant with increased global integration. The internalization of the equity market depended on achieving a combination of sufficient scale and liquidity and attractive valuation, among other conditions. The international bond market has also become an important source of long-term funding for larger Malaysian corporations. In particular, offshore bond issues increased in the mid-1990s, reflecting in the part relatively more attractive cost of overseas funds due to the upward shift in the term structure of those domestic interest rate during 1995 and increased foreign demand. The onset of the Asian crisis in 1997 until 98 adversely affected offshore fund raising activity by Malaysian corporation. However, with the crisis, a spate of credit rating downgrade across emerging market issue and significantly increased the credit risk premium demanded by global investors led to a significant increase in the international cost of fund for Malaysian companies. As the cost of overseas fund increased, the amount of fund raised by Malaysian companies through the international bond issue declined. Similarly, foreign activity in Malaysia's equity and derivative market declined following the regional financial crisis. Annual foreign net portfolio investment in Malaysia's securities fell sharply from its 1993 peak to negative level in 1997 to 1998 before recovering gradually. As of mid in 2001, foreign accounted for 10.7% of shareholders but held 15.9% of the total value of equity on the KLSE. Malaysian investment in foreign business increased sharply over the 1990s, while gross foreign equity investment in Malaysia business rose by only 3.7% over the period 1991 until 2001. Malaysian ownership of foreign business surged by 519.5% This surge in investment abroad reflect to some extent government policy to encourage reverse investment to create synergetic relationship with foreign market. Another thrust of this policy was the disaggregation of production process to retain the high value added operation in Malaysia and create supporting production ventures offshore appropriate to the local skill and technology level. Various global multilateral negotiation to liberalize access to the financial services sector reflects the government's recognition of the importance of liberalization in furthering Malaysian economic interests. In the 1994 Uruguay round of multilateral trade negotiation of the General Agreement on Trade in Service GATS, Malaysian commitments include measures to raise limit on foreign equity ownership in stockbroking companies and measures relating to the entry of managers, specialized expert and professionals and commercial prisons. In December 1995, Malaysia also entered into the Asian Framework Agreement on Service, one aspect of which was to develop commitments on financial services liberalization.
Okay, my name is Muhammad Syahran bin Mansur. My matric number is 19BB05007. Okay, next. I will present to you about consideration, restructuring and governance of the capital market. Okay, in August 1999, the Minister of Finance announced a mandate for the capital market plan to provide such a comprehensive and cohesive strategy for Malaysia. The objective of the capital market plan is first, to develop the capital market as the preferred fundraising center for Malaysia companies. Two, to promote an effective investment management industry and a more conducive environment for investor. Number three, to enhance the competitive position and efficiency of market institutions. Number four, to develop a strong and competitive environment for intermediary service. Number five, to ensure a stronger and more facilitating regulatory regime. And the last one is to establish Malaysia as an international Islamic capital market center. These objectives are linked to 24 strategies, initiatives, and 152 recommendations in the areas of market institution, the stock broking industry, the derivative market, investment management, the equity and bond market, the Islamic capital market, technology and e-commerce, training and education, corporate governance and the regulatory framework. The capital market plan is being implemented three phases. Phase number one in 2001 until 2003, there is strengthen domestic capacity and develop strategy and nascent sectors. Phase number two is in 2004 until 2005, further strengthen key sector and gradually liberalize market access. And phase number three in 2006 into 2010, further expand and strengthen market process and infrastructure to become a fully developed capital market. And point number two for the phase number three is enhance international positioning in area of comparative and competitive advantage. The capital market plan recommended that the exchange should consolidate, demutualize, and list order to be to accomplish this goal. One key to the future development of the capital market is the creation of single exchange with the consideration of all the existing exchange under the KLSE group, which is largely accomplished. The Capital Market Plan identified a range of capital market-related measures to promote the development of high-growth and technology companies. And the point last in this section is the Capital Market Master Plan builds upon the foundation laid by the Finance Committee's report with measures to further enhance the enforcement of minority shareholder rights, to improve continuous disclosure by listed company, and to enhance auditor responsibility. Thank you.
We will go through the final subtopic in this topic. So, as a conclusion, a key priority in moving forward is to implement the recommendations in the Capital Market Master Plan effectively according to schedule. In the process, implementation must balance the need to increase competition, innovation, and liquidity in the capital markets with the overarching priorities of maintaining fair, orderly, and efficient markets with high standards of supervision, enforcement, and investor protection. The urgency for change needs to be continuously weighed against the potential implications for market stability and integrity. Thus, the implementation against the potential implications for market stability and integrity, schedule and ongoing periodic assessments take into account the readiness of market participants to respond to market changes, as well as the prevailing market conditions and the stage of market development. Pragmatic sequencing is particularly essential in the deregulation and liberalization of various segments of the capital market. Appropriate preparatory measures must precede the facilitation of competition within the domestic market in order to enhance the resilience of market participants beforehand and to avoid severe economic displacement from a sharp increase in competition. The implementation schedule for the CMP identifies certain areas of the capital market where action should be taken early on. This includes certain strategic and nascent sectors such as the investment management industry, venture capital industry, the Islamic capital market, and the derivative market, where the immediate priority is to introduce greater competition and skills transfer to raise the level and equality of services products offered in Malaysia's capital market. In addition, recommendations that carry broad-based implications affecting other recommendations or a broad spectrum of market participants will be implemented sooner rather than later. Finally, while pursuing deregulation and liberalization, the regulatory authorities will maintain an active dialogues with market participants, international counterparts, and international bodies such as the International Organization of Securities Commission (IOSCO) to facilitate consistency with appropriate international standards and to closely monitor international developments. This is expected to foster the development of Malaysia's capital market.